Hey, what's going on, guys? I'm going to be showcasing the AlgoVision Advanced Candle Range Theory CRT indicator slash strategy. So this one has the strategy built in. So it provides entries and exits, and you can backtest data with it. So just going through it real quick, what you'll do is after purchasing it on our website, which is algovisiontrading.com, you'll go to your indicator tab on TradingView, you'll go to invite only, and then we'll have it shared with you. So it'll be the Candle Range Theory Advanced AlgoVision, and then it should show this little thing right here. That means it's a strategy. So after you load it up and everything, you'll see all these signals on your chart, right? And then again, this is trading the Candle Range Theory 3-candle model. So your stats should start out something like this, possibly all over the place, right? Because it's trading every single one that fits the criteria. So the first thing that I would do after loading this up, if you want to backtest and then set up a strategy a specific way, you get rid of the start date to verify you're doing as much data as you can back. And if you have the upgraded trading view, you can do deep backtesting, but you have to remove the start date. And then you could test previous years where your candlesticks don't actually go back on the chart. So that's what I would do first, and then you're ready to work with it, right? So just going through the indicator, I have a whole video, and I'll be posting a newer one about optimizing, but right now just going through the indicator and explaining what everything does. The match candle at signal is going to verify that the candlestick lines up with whatever signal you're getting. So for example here, there's a bullish signal, right? So with this bullish signal, you're going to look at this match candle with signal. So if it's off, then it's just calling the trade no matter what candlesticks you have. However, if you turn, for example, both on, then for a bullish signal, it needs to be candle 1 and candle 2 need to both be bullish for a bullish signal to occur. So let's look at one real quick. There's not many that fit that criteria. So this one, for example, this is bullish signal. So candle 1, candle 2, right, wicked the low, closed above, and both of them are bullish, so it verified that both of them were bullish and gave a bullish signal here. So that's what the both does. The candle 2, again, this setup's going to be called again because candle 2 is bullish and it's a bullish signal. So it lines up the bullish candle 2 with the bullish signal. And then candle 1 is going to verify that candle 1 is bullish. So this candle right here could be either bullish or bearish. However, candle 1 has to be bullish for it to filter this one in. TP already reached. That's going to get rid of take profit 2 being reached in candle 1, I believe. It might be candle 2, hang on. Candle 1 midpoint hit before candle 3 opened. So what that's going to do is before the candle 3 opens, it's going to verify that the midpoint of candle 1 wasn't hit. So for example, you see this one right here. The midpoint is right here of candle 1. So you get candle 1, candle 2, wicks the low, closes above. Because the midpoint was not reached yet, it's going to verify this, and it's going to only call trades where this midpoint has not been hit yet in candle 2. So let's look at one that's filtering out just to show you an example. So this one right here is getting filtered out. This short right here was filtered out when you put that filter on because the midpoint was hit in candle 2. So the reason that we did that is that TP1 is the midpoint of the range, and to get rid of, like, if the middle of the range wasn't hit yet, then that means your TP1 is still valid in candle 3. If not, then that means you should probably target TP2 is going to be the better target because TP1 was already hit and rejected from, right? So that's what that filter does. Midnight, you have to set midnight for whatever hour the closes on the time frame on the asset you're trading, like crypto and forex. Obviously, midnight's at the same time, but on the actual chart, it's different because the candles are different and the daily open and stuff like that is different. So midnight is going to, when you filter it and get it set up for midnight specifically, it's going to filter out trades where it's only going to sell above midnight. So see how the short is above the midnight that's marking. And if you wanted to change this to like a daily open rather than midnight, you can. You just need to change it to the hour that that occurs for the asset you're trading. So above midnight, once you set it up for midnight, above midnight it's only going to take short trades, and below midnight it's only going to take long trades. So you see midnight's right here for this day. It got a bullish signal below midnight, right? So it's only going to take bullish signals below midnight, and vice versa. Short signals above midnight, bullish signals below midnight. And that's feeding into that power 3 aspect. Wick out is more for if you're going to run this as a bot, because it's going to enable you to not be wicked out of trades. So how you would use this is if you were running it as a bot where it's entering and exiting by itself, you would change this order block time to whatever time frame you want to verify that your stop loss gets closed below or above. So for on a 4-hour, for example, if this got wicked on a 15-minute, but the 15-minute candle closed above this low, you wouldn't get stopped out of the position. And the backtesting data does not work with this, so do not use this for backtesting because TradingView only stores the open, high, low, and close of candles. So backtesting wise, it's not going to show you the actual results of the data. So in backtesting, just don't have this one enabled. Everything else backtesting wise works. This one just doesn't work because more for a live trading aspect of the algo rather than the backtesting aspect. Bias, you can put a bias for buys only, it will only show buy signals. Sells only show sell signals. And then high time frame candle is something that we just implemented. It's going to put a bias that we've made for the higher time frame. And a lot of the newer bots that I'm running are using this because it does make your setups higher probability. So I'm using this on a lot of the setups that I'm currently running, and I'll show you a few. I got a bunch here. So yeah, that's putting a high time frame candle bias. So it's going to only take trades within the bias that we're giving with the higher time frame. The stop loss you can add to your stop loss if you wanted to. The stop loss for this on the strategy is below candle 2 and above candle 2. So this is by dollar amount, and you could just add if you wanted a wider stop loss for some reason within your strategy, you can add that there. Second TP, first TP. So again, second TP is the opposing end of the range. So the low of candle 1 on a short and the high of candle 1 on a long. First take profit is going to be TP1, and that is the midpoint. So if you wanted to take profit at the midpoint, you would set this one. The optimized TP, if candle 3 closes below the midpoint in a short, it's going to target the opposing end. And if it closes above the midpoint in a long, it's going to target the opposing end as well. Most of my bots are running second TP as well. I found that it's better with that. Scalping wise, running like a 30-minute bot on crypto at least, for example, I found that first TP works a lot better and it hits a lot more often. This is a low time frame entry, so it's using an order block to entry. So whatever time frame you're trading or whatever order block you want to use, whatever time frame order block you want to use, you can work with that here. Minimum distance from stop loss to entry. So I filter a lot of the bots with this because price action where, for example, for crypto specifically, during bear markets, the price isn't relative to what it is during a bull market. So I filter out a lot of the price action where the price really isn't moving and the coins are down like 90%. So you could just filter out. So for like Bitcoin, you would filter out maybe by like $100, right? And what that would do is verify that your stop loss is at least $100 away from your entry price. So it's going to filter out trades where you're likely to get stopped out because of how close your stop loss is to the entry. FEGs is something that we also just added. So what that is, it's going to mark an FEG and verify that candle 2 occurs within the FEG. And this makes the setups higher probability as well. So you have candle 1, candle 2, taps this FEG, closes bearish, and then you took profit down here at the low of candle 2. So it's implementing FEGs within the algo. And same thing for bullish setups. And it marks out the FEG and everything too for you. So it's using like a key level almost is what the FEGs are for. This is more for the running it as a bot. It's just telling the quantity that you would be entering with. You can also do a fixed amount of the account if you want to do a fixed amount risk or a percent of the account, and you would input the amount, the initial capital in here. So if you had a $500 account, you would input it there. If you wanted to risk 1%, you would put 0.01 in the percent of account, and you would change this to percent of the account. If you wanted to risk $10, you do a fixed amount risk, and you put 10 in. And that's more for running it as a bot. A big one here is the risk to reward factor. So you can literally just come in here. If you didn't want any of these other filters, you could come in here and only mark specific CRTs that have a specific risk to reward ratio. And that will benefit you from looking at the charts and waiting for setups where you're looking for a specific risk to reward. So if you wanted to only look for 3 risk to rewards, you'll filter for 3, and it'll only show setups where there's 3 RR to whatever your take profit level is from your entry. This is pretty self-explanatory. This is just filtering days of the week, so you could filter out Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. So that's filtering out days of the week. I'll come back to this one. This filters out specific hours of the day, and so it depends on where your candle opens. So for crypto, for example, the 4-hour candles, this is due to daylight saving. It's going to say 11 p.m. here. But the 4-hour candles only occur on 4-hour intervals from 4, 8, 12, 4, 8, 12. It'll be different for Forex. Forex is 159, 159, and then futures is 2, 2, 6, 10, 2, 6, 10. But if you were on an hourly time frame, you could filter out specific hours because of when the candles occur. This is purge time, so what this does is it's going to allow you to pick specific times where candle 2 purges candle 1. So if you wanted to only look for 9 a.m. to 10 a.m. purges, you would filter this on, you would enable it, and then it will only look for trades where candle 1 was purged between 9 to 10 a.m. So let me just run through some real quick that I've optimized. This one isn't. So BNB I optimize. This is for all the data that Binance has on it. It's on an 8-hour time frame. This is for the last 4 years, so you would have gained. I only have it risking $1. Hang on. So with $100 risk for the last 4 years, you would have gained $5,800 on the account, $580 in drawdown. So about 6R loss. And then let's look at another one. AVAX I've optimized. You would have gained 3,000 on the account, risking 100. You would have had a 570 max drawdown. However, most of the drawdowns, the max drawdowns, occur after running the account up. So it depends where you start the bot, but most of these bots are built for long periods of time so that you gain on your account over time. Bitcoin I optimize as well. This will be the last one I show you. So you would have gained 3,800 on the account over the last 4 years, 54% profitable, 1.7 profit factor, and that's calculated by profit over loss. So you gained a total of 1.7 R compared to your R. So I hope you guys enjoyed the showcase. Again, this is the AlgoVision Candle Range Theory Advanced Indicator, and you could go to our website, algovisiontrading.com, and purchase it if you would like to.